Hello and welcome. Today we're going to talk about a video that I just watched from Dante London. It's called I Regret Buying a New Truck. And I continuously watch his videos because he's very inspiring and very just honest and raw. And I really appreciate that. And when he was going out looking at cars, it made me nervous because I'm, debt free. Debt free for everyone is the goal. And so when he was looking at these vehicles, at first I thought he was going to pay cash, but then he started talking about payments. And so I right away was turned off by that and thinking, God, you shouldn't do this. You shouldn't do this. You shouldn't do this. But then they stopped looking for a car. So I thought, okay, well, that's good. They won't buy a car on payments. But then he bought this beautiful truck, 2019 Ram, I think it is. And it's beautiful. It's fabulous, I'm sure. But he got it on payments. And now he's regretting it. He's had it, I don't know how long he's had it because I don't know what date his videos are from, probably a week or so. And this happens to a lot of people that buy cars. I used to sell cars. I used to sell cars at a dealership that focused on people that had lower credit scores. So it's not a new area for me. And a lot of people, first off, they would tell us, what car they wanted. At the time, when was this? 2015, 16, 17, or 14, 15, 16, 17, something like that. And everyone at that time wanted a Charger. If it wasn't a Charger, they wanted, I don't remember what the SUV, a Tahoe, either a Charger or a Tahoe. That's what everyone wanted. But everyone's credit score was, 450 or 500. And if you have a lower credit score, you're not going to get a payment or interest rates that are going to be suitable for a normal income. I mean, I don't know. Okay. If your interest rate is if you have low credit, if your credit score is less than 600, when it gets above I think it's 620, it used to be 620. When you're above 620, you're considered kind of average. When you're above 700, then you're a little bit above average, and so on. So when you're less than 600, your interest rate is going to be high. That's a given. We know that. And so one way you can lower that interest rate is by putting more as a down payment. You can help to bring those payments down, bring that interest rate down a little bit. But sometimes you don't have that down payment to put down. And there's so much that goes into this. So I wrote down a few things because I know I go off on these tangents. So I'm not going to go off on any tangents. I'm just going to speak in general terms. I'm not going to speak directly to his video. I am going to link his video down below because I think it's very interesting to watch. And if you're in the process of thinking you need to get a car and you need to go, upgrade your car or whatever, you need to go watch this video. You need to go watch this video because it's real life, and people think that everyone has a car payment. Everyone has a car payment. Not everyone has a car payment, and you don't need a car payment. You need less of a car. Get less of a car so that you don't have to have a car payment. People don't believe me. People don't believe me. People don't believe me. I'm telling you, a 10-year-old car, if it was taken care of, if it's a decent brand, a decent model, and you continue to take care of it, it will run for another 10 years or so. So let me go back to my little notes that I made. So first, when you're looking for a car, first have an idea of what you're looking for, right? Is it realistic for you to want the car that you're looking for? For many of the people that I sold cars to, searching for a Charger was not feasible. It was not even reasonable because many of these people ended up with an Avenger. I don't know if anyone even knows what an Avenger is. It's the little sister to a Charger. And that's not what they wanted. But if they would have researched before they came to the dealership, they would have known that a Charger I probably can't afford. And this is how many? This is almost 10 years ago now. So I keep saying Charger just because that's the car that, you know, as car salespeople, we used to kind of chuckle because, oh, here comes another Charger. And people, very few people ever got the Charger at my dealership anyway, the dealerships that I worked at. But anyway, one of the important parts of any loan that you sign up for, any loan, it doesn't matter if you're buying a car, a sweater, a purse, a house, a rental car, like it doesn't matter what you're signing up for. It is important to know the terms. If you buy an expensive car and you have a high interest rate, your payments are going to be high, your term is going to be long. By the time you get close to paying off your car will be breaking down on the side of the road somewhere. I mean, not really, but I mean, it can. And it's not a good plan. So before you sign off on any paperwork at any dealership, no matter what you're doing, or any other purchase that you're financing something, know the terms. If your interest rate with bad credit is above like 10 or 12%, don't get that car. Don't get it. It's not for you. That was not meant to be. And if you read the terms, have the salesperson tell you the terms. It's better if you can read them and see them, because then maybe it'll sink in that, boy, I'm signing up for a 19% interest rate, or I'm signing up for a 23% interest rate. I've sold cars before the interest rate was like 23.49 or some nonsense. Why are you paying 23% on a car note? You're going to be paying that for 4 years, 23% on a $20,000, or in that case, those were probably $15,000 cars at the time. And you're paying 23%. What? I can't. I can't. I just can't. Part of the reason why your interest rate matters is, of course, because they are needing to collect their money, right? They want the money back. You're a risk. When you have a low credit score, you're a risk to the bank. So the bank wants their money back as much as possible, as soon as possible, to make up for that risk. So most of the time, those starter payments, those payments during your first year or whatever, are basically going toward interest. They're not really going toward the principal, unless you purposefully call and make a principal payment if you're doing a car. Now, if you look at the terms and you don't know if those are good terms, don't sign that agreement. Wait, go home, research it overnight, and go back the next day. The dealership wants to make money. When we sold cars I was at 2 different dealerships, and salespeople, of course, work on commission. So, of course, we want commission. And so at the end of the month, that's when we're trying to get as many deals as we can get done so we can get that bigger commission check, on the next check. So at the end of the month, that's a good time. I mean, not a good time, but if you're going to have to go finance a car, that's a time to do it at the end of the month. Now, every dealership is a little bit different. So some dealerships do a wrap up at the beginning of the month. Some do it in the mid-month. The ones I was with did at the end of the month. Now, the first dealership I worked with, we had 2 bonuses a month. And so I think it was the 15th and the 30th. So middle of the month and the end of the month is when we got our bonuses, or commissions really is what it was. And so the more cars you sold, obviously, the higher the commission. That dealership can wait another day to get your money that you're going to give them on that car. Now, if you don't read the terms, if you don't know the terms, do not sign that contract. Do not sign that contract. One thing I want you to know is that if you don't know the terms of whatever it is you're signing up for, whatever it is, it doesn't matter if it's a car, a house, a a potted plant. It doesn't matter what you're signing up for. But if you're signing up for payments and you don't know the terms, you're screwing yourself. I promise you, you're screwing yourself. I promise you. I promise you. For multiple reasons, but mostly because you don't know the terms and you don't know how much you're actually paying for whatever it is you're buying. Like, this is serious. It's a serious conversation and people don't understand. They think, I need a car. I need it today. How do I get it today? And they sign up for whatever the salesperson hands them. And there are predatory dealerships that make it even worse, that make it even, the interest rate is horrendous because of the banks that they use. Now, if you go with a little bit of a bigger bank, you know, it'll be a little bit more by the law. But don't go with these little small banks that are charging you 26% interest on a car. Like, that's ridiculous. Like, don't do this to yourself. Don't do this to yourself. You're signing yourself up for a minimum of 3 years, usually more, 3 to 4 years of payments. Now, I looked, the average car payment in America is approximately $730. Now, on top of your $730, and this is something that Dante mentioned, you also have to pay for the full coverage insurance, because you cannot drive the car off the lot without full coverage insurance, because if you crash it, the insurance will pay for it and pay off your loan. If you crash it and you don't have insurance, you're left paying the bill, and that's not going to happen because you didn't have $30,000 to buy it when you first looked at it. Why would you have $30,000 after you crash it? So you have to have full coverage insurance. So maybe your full coverage insurance is $100 because you have a great driving record. Maybe it's $200 because you have a good driving record, but your credit is low, although they're not supposed to use credit in some states. So keep that in mind. But, you know, there's stipulations or there's reasons why your insurance rate goes up. So look at your insurance. Figure out, how much is my insurance? Is my insurance going to be $100 or is my insurance going to be $600 a month? I need to know this. The more valuable your car, the higher your insurance payment. So keep that in mind, because if they have to replace that car, the more expensive your car is, the more expensive it is to replace it. Okay, so if you buy a less expensive car, your insurance automatically is going to be a little less because the cost to replace the car is less. Okay, look at all of these things when you're off buying a car. If you haven't looked at your terms, you don't know what kind of insurance you need, you don't know what your interest rate is, you don't know what your term is, how long you're paying it for, how much your payments even are, and how much you'll pay if you just pay your minimum payment every time for the next 3, 4, 5 years. Know those things before you sign off on it. If you look at that number, it's like an amortization. It's like 3 pages long or so. At the very bottom, it'll show you how much you will have paid for that vehicle. And when you see that number, if you throw up a little bit, don't get that car. If you don't throw up, then hey, that's your business. Do what you do. But look at these numbers. These are important numbers. This is your life. This is your money that you're voluntarily donating to a company that cares nothing about you, your car, or anything else. Okay? Now, if you need a car immediately because your car is dangerous, in Dante's example, the frame of his vehicle was actually deteriorating, and the car transmission people, I guess it must have been, showed him, and he was able to record and look under the car. It was dangerous, highly dangerous. So you absolutely need a vehicle as quickly as possible. In that situation, you have choices, right? Perhaps you don't have any money saved in an emergency fund or anything else. Perhaps it's possible. And if you don't, then okay, you're going to have to go to the dealership and see what you can do. If you go to the dealership and see what you can do, do not pick out the prettiest vehicle that's on the lot. Pick out the ugly one in the corner that's been sitting there for 4 months and no one wants to buy it, because guess what? They're going to crack you a deal on that car because nobody want it. But if you're willing to buy it, they're going to get you a deal. And if they don't, move on to another dealership. There's hundreds of dealerships in every city. Well, not every city. In most large cities, there's hundreds of car dealerships. And you can find one that will work for you. Don't walk into something blindly and just take whatever they're going to give you, which is going to be the most expensive car that you'll get approved for, the most expensive payments that you'll get approved for, and the longest term that you'll get approved for in order for your payments to look like they're less. Okay? If you get a 3-year plan, a 3-year mortgage is what I'm saying. That's not what I mean. If you get a 3-year car note versus a 5-year car note, of course, if you get the same car, the 3-year, of course, is going to have higher payments than the 5-year, of course. But if you have the option and everything else is about the same and you can't really change anything about the situation, choose the shorter term. If nothing else, choose the shorter term. Keeping in mind, if they repossess that vehicle, it doesn't matter if you call and say, I can't afford it, come get it. Or if they say you haven't paid, what's going on? If they come pick up that vehicle, that's going to hit you on your credit and it's going to stay on your credit for, I believe it's a minimum of 7 years. You don't want to do that. And I am not a believer of living off of your credit score. If you have a great credit score, keep it that way, of course. But if you have a low credit score, don't go deeper down the hole of having a low credit score. Slowly but surely, if you're a renter, pay rent. If you have a mortgage, pay your mortgage on time. Those things will typically help you get your credit score up. Having a car payment can help as well, but only if you can afford the car payment plus the insurance payment. Okay? You have to be able to afford both and look at both. Don't just think, oh, well, this is a really pretty car. I always wanted a Corvette. And so now I want this Vet and it's only, $580 a month. Oh, but a Corvette has a $500 insurance rate every month as well, by the way. So now you're at over $1,000 in payment for that vehicle. I just want you to pay attention. I just want you to pay attention. It doesn't matter if they repossess your vehicle or if you do a voluntary repossession. It looks the same to the next bank. It's a repossession. It means you couldn't pay the bill, is what it means. Regardless whether you give it to them before you pay a payment or you give it to them after you've paid 100 payments or they come and take it because you haven't paid 100 payments. It doesn't matter. It's a repossession for the next bank that wants to give you money. That's what it is. And so you're going to lower that credit score. Now, let me go back to if you need a vehicle quickly. So if you do need a vehicle quickly and you have to go to the dealership, look for brands that you know are going to run forever. There's a few brands that everyone jokes about that run forever, quote unquote. No car runs forever. But if you take care of certain cars, they do seem to last longer and they do seem to take abuse a little bit better. Those are kind of the standard is the Honda Accord specifically, the Toyota Camry specifically. I wouldn't go to the Avalon because it's got fanciness on it. And these are old cars. These are older cars. These aren't brand new 2020, 2017. Get a 10-year-old car. Get a 10-year-old car. Have it checked before you pay for it, before you sign the paperwork. Have it checked. Tell the dealership, I need to take it to my shop to have it checked out. If they say no, you already know there's something wrong. You move to the next dealership. Dealerships will allow you to take it to a shop to check it out. You don't have 3 days to do so. You have to go that day or whatever, but most dealerships will allow you to do that. So I highly recommend you do that because if you're able to have it checked out, you can check to make sure it's rather clean. Now, if it's a 8 to 10-year-old car, of course, it's not going to be perfect. We all know that. There's going to be flaws. We all know that. It may need tires. It may need an oil change. It may need, the battery replacement, whatever. But keep it realistic. Keep it realistic. Don't get yourself into a payment you can't afford. Please, for the love of God, don't get yourself into a payment you can't afford. The car and the insurance, you need to be able to afford both. Long term, not just this month and next month. Long term, for the whole time of the term that you signed up for. 3 years, 4 years, 5 years, 6 years. I saw one for 7 years the other day. I saw some commercial about 82 months. What are we paying for a car for 82 months for? Don't do it. Don't do it. I'm telling you now, don't do it. Sorry for my rants. Hopefully you're still here. I don't know if you are, but thank you. If you are still here, thank you. Share, if you would, if you have a car payment and how much you pay a month. Not because I'm going to criticize. I am going to judge in my own mind, but not out loud. But you have to understand this is how they get us. This is how they keep us down. They keep you on the grind with all these payments. Stop creating payments for yourself and you don't have to grind so hard. I promise you. Thanks so much. Y'all have a great one.